Good morning and welcome to the program. I am Bisi Adebayo. Oil prices are up about 2% in early trade today after industry data showed crude inventories in the United States fell sharply, although trading was choppy as the outcome of the U.S. presidential election remained unclear. U.S. WTI was up 2.1% at $38.46 a barrel, while Brent crude was 2% higher at $40.51 a barrel after trading between $39.85 and $40.70. Oil prices fell more than 10% last week as global coronavirus cases soared and more restrictions on movement hit demand prospects. U.S. oil has nearly recouped those losses in 3 days of gains this week in the run-up to the election. Meanwhile, data from industry group, the American Petroleum Institute, showed that U.S. crude oil stocks fell sharply last week, while gasoline inventories rose. Meantime, the COVID-19 pandemic seems to have taken a back seat at the moment as all eyes are on the outcome of the U.S. elections. Volatility in the global markets increased ahead of the election, and with the outcome of the presidential race still uncertain, the volatility is expected to continue not just in the financial market, but also the oil market. And that's raising questions about the impact of the election on the global markets in the coming days and weeks and what it would mean for Nigeria. I'm being joined by the acting managing director at Quarters Capital, Bolahon Aino, to discuss this. Good morning, Mr. Aino. Thank you for joining us on the program. Now, how keenly are you watching this U.S. election, and what does it mean to you as an investment and market analyst?
Good morning, DC. Thanks for having me. The U.S. election is quite important, not just to me, I think to everybody, and because of what U.S. represents. U.S. is the largest economy in the world with GDP of over $2 trillion. And that is massive in terms of external debt as well. The U.S., they are the largest external debtor to the world as well. So people really want to know what happens in the U.S. election. In terms of crude importation as well, U.S., they are the second largest importer to crude, second only to China. Last year, they did about $132 billion in terms of the total importation. U.S. also have the largest stock exchange, which is the New York Stock Exchange as well. So all these things that people are watching, they are quite important to a lot of people. For a lot of Nigerians, we know that a lot of people have migrated to the U.S. as well. And recent times, some policies by Trump as well has affected a lot of Nigerians as well. So Nigerians are watching, China is watching, Iran is watching to see the outcome of the election. So it's quite a big news. And I believe the results of the election is also going to affect the oil price, like you said. Maybe not an immediate impact. Trump, for instance, is being against Iran. And because of certain sanctions as well, that has kept oil supply a bit abated. We expect the Democratic candidate, which is Biden, to losing some of the sanctions, so we might see some oil returning back to the market. But by and large, a lot of people are watching to see the outcome of the election because it affects markets, it affects industry, and of course, going to affect the oil market, like you said.
About the impact on the markets now, do we expect an immediate market reaction from the results, particularly the currency and the fixed income markets?
Okay, while you are reporting, though, you mentioned that to run up to the election, we saw a rally in the oil market. Before the oil market, before the rally we saw on Monday, there had been a decline. When we began to see some European countries begin to lock down a second wave of pandemic, so there was a bit of lockdown. And because of that, that has significant impact on oil prices. But in terms of how does it impact our market, really, I don't see significant impact on our market. And really, the way investors view Nigeria is usually an oil play. Really, whatever happens to oil affects Nigeria. And also in terms of the FX regime or the FX currency. So while the U.S. election might not have a direct impact, I believe U.S. election is going to have a correlation with the oil market, and that's going to affect Nigeria's revenue because really we earn petrodollar, most of our revenues are in dollar. So if dollar is affected, our exchange rate will be affected, our revenue will be affected, and of course our investors view Nigeria will be affected as well. If you're earning a lot of dollars, for instance, that means you're going to have LD external reserve. That means there's going to be less pressure on the exchange rate. At the moment, exchange has a bit stabilized, and that's because oil price has a bit rallied up a bit. If you remember earlier in the year when we had the pandemic, oil price came down to record lows, but over the course of the months, oil has stabilized a bit. So the outcome of election, like you said, is going to have like a major factor. If President Trump should win, for instance, we expect status quo. We're expecting to maintain the sanction already on Iran as well, and some certain trade war with China as well. But if Joe Biden wins, we expect some of those sanctions to be relaxed as well, and that might say about 2 million barrels of crude coming into the market daily. That means that's going to increase the glut in the market. That probably portends that oil price might come down a bit, and that might also affect them in terms of the revenue Nigeria is earning from oil receipts.
All right, Mr. Enoch, we'll get back to you in just a moment. We need to reconnect with you to touch up on your audio a bit, but while we wait to reconnect with Walawa, let's just do a quick recap of the crude oil markets. Of course, earlier on, we told you that oil prices are up about 2% in early trade today, even as everyone is waiting for the outcome of the U.S. presidential election. And then industry data show that crude inventories in the United States fell sharply. Looking at the prices now, US WTI was up 2.1% at $38.46 a barrel, and Brent crude was 2% higher at $40.51 a barrel, and that came after trading between $39.85 and $40.70 earlier. Oil prices fell more than 10% last week, and that was a result of global coronavirus cases, which has continued to skyrocket, and more restrictions on movement are hitting demand prospects. U.S. oil has nearly recouped those losses in the 3 days of gains this week so far in the run-up to election. All right, let's continue our conversation with Walawa Aina, now the Managing Director at Quadras Capital. Thank you for hooking up with us once again. Now, let's still dwell more on the oil markets. Of course, it's been preoccupied for months with concerns surrounding weaker demand driven by COVID-19 economic restrictions. But then the U.S. presidential election has started to take center stage as traders weigh election win scenarios and the potential outcomes for the energy sector. So what would a Biden win mean for the oil markets, and what will the Trump win mean for the markets as well?
Okay, thank you, BC. Like I mentioned earlier on, if Biden should win, certain sanctions that were with Iran, we expect that to be relaxed. So if that is relaxed, we should expect about 2 million barrels of oil coming back into the market, and that means the supply glut is going to increase. Biden also mentioned that the trade relations with China as well is expected to be losing. So certain trade policies, and that's going to mean an uptick in exchange of goods and a spike in demand for maritime bunker fuel as well. So while that might be, so that's going to increase the oil supply, and like I mentioned earlier on, that might mean that there's going to be a reduction in oil price, which might not well be too good for Nigeria. So we've seen OPEC Plus rather in the past couple of months they've maintained a production quota, and so they want to maintain that quota to early next year, 2021. So a Biden win, like I said, will mean lifting of restriction on Iran's oil exports, which could add additional 2 million barrels to crude oil supply. Given the oil outlook, this means lower oil prices with negative impacts for Nigeria. A Trump win means status quo, and that means Iran's sanctions will be maintained, and that might support oil prices or keep oil prices afloat, currently averaging about $40 this year.
Now, what elements of this election do you think is critical for investors, particularly for Nigeria?
Okay, beyond the election, why I think the election is very important, beyond the election, I think the COVID-19 narrative is still going to have a major impact. You were mentioning earlier on that so there's been a bit of lockdown by certain European countries because of the second wave of the pandemic, and that's going to mean a reduction in global travel from the fresh lockdown. That's going to definitely reduce demand for crude oil. Global trade is also expected to slow down if you have a second wave. So we expect to see slower oil prices, which of course is going to be negative export earnings. What we also expect is that, sorry?
Go ahead.
Yes, but how does that impact Nigeria? Like I said, for Nigeria, it's always an oil play. Earlier on when there was the lockdown, we saw a lot of supply chain disruptions, and of course that had impacts on importation of raw materials and that also put pressure on domestic prices. But like I said, that's going to impact how people demand for oil. And if there's a lot of demand for oil, for instance, that is good for Nigeria. But we expect to see a lot of gluts as global travel reduces, as there's lockdown, manufacturing firms cannot do as much as they were doing before. So it's going to be more of a COVID-19 play more than the US election results.
Now, away from the impact on the oil markets now, oftentimes the Nigerian equities markets don't react to some of these external factors like this election. Why does that happen?
So sometimes they do, and for the Nigerian equity markets, it's usually how people view oil, because Nigeria basically in oil. So if oil is good for us, people think Nigerian economy is going to do well. And also our exchange rates. So the FPIs have been on the sideline for a while because of certain FX regime. So if they are comfortable with the FX regime, if oil is good, you can see a lot of FPIs coming back into the market. However, for our local investors, the PFAs, national investors, for instance, if you backtrack about 2 years ago, we had high interest rates. And so rather than investing in the equity market, we're investing in fixed income instruments with high rates. But we expect to see impact, and we've been seeing a lot of impact in the equity market of recent, and really because of low yield environments we've seen. So while we might not see direct impact from the election, I believe we're going to see a correlation in oil price because of the election, and that's going to impact our exchange rates, and it's going to impact how people view Nigeria. So there's going to be sort of an impact on the equity markets.
All right, while we wait to see that happen, let's talk about the trade relationship between Nigeria and the U.S. Of course, there's a two-way figure estimated at $9 billion. Is there any likelihood that that has been affected in any way?
Well, so trade generally has been affected, not just because of who the president is, really because of the pandemic that we've seen. But like I was saying, the Democratic Party, they are more liberal. So, and hopefully, well, not hopefully though, if they win, we might see an increase in terms of trade relation with the US. If the Republican win, like I said, it's going to be status quo. But what is really affecting market generally is currently the pandemic, and that's really affected trades. So if the election goes either way, I think you can see a vaccine quicker than before. That might affect how people begin to transact in the coming months.
But when it comes to foreign trade, in terms of major trading partnership by percentage share, the U.S. comprises 10.6% as at the second quarter of this year. Are we likely to see a change in that status in the third quarter?
No, not in the third quarter. So I guess in 2021, that figure will change. And it's going to depend on two things: the outcome of the election and also the pandemic. Have things improved? Are we having a second or third wave?
But in the area of capital importation now, the United States is one of the top sources of capital importation to Nigeria, with an estimated $126 million as of the second quarter. Do you see any form of impact there?
Oh, yeah, definitely. So if you even look at capital importation figure, it has reduced significantly. One in terms of remittances, one in terms of FDIs, and one in terms of the FPIs as well. So view of exchange rates has been either here or there. And also, since we had the lockdown, the pandemic, a lot of remittances that were seen in the country were not coming as we used to have it before. In the past, remittances were even more than oil receipts. That has changed a bit. So it's like you rightly said, it's going to affect capital importation, and it's likely so it's going to still be sustained.
Now, let me take the conversation back again, talking about crude oil now. Of course, when you look at the mandates of the two presidential candidates, former Vice President Joe Biden has said that he will put a stop to shale oil fracking. Do you consider such strategy as positive for Nigeria-U.S. bilateral trade as it relates to the U.S. resumption of Nigeria's crude oil purchase?
Yeah, so that's positive for us if there's a stop to fracking. Because the guys that ultimately the oil supply is going to be reduced, so that's positive for us if there's a stop to fracking. But whether he's going to go ahead with that, that's another thing. But that's good for us in terms of our bilateral trade with the US.
But what about the impact it will have on Nigeria's oil revenue?
Yeah, so the impact is going to be positive because supply is going to be reduced. Usually, like I said, it's a demand and supply dynamics. If you have a lot of glut in the market, that is not good for us as a country. That affects our crude oil price. And of course, if we have low crude oil prices, that means we have low oil receipts. So for us, we usually want to have at least oil price stabilized. That means we're going to have increased oil receipts. We're going to have shut up reserve. We're going to have stable external reserve. So that's why the OPEC Plus, sorry, they've been having a production cut. They're going to meet on 30th of November again this month, and we expect them to maintain the production cut up until 2021 January.
So how should investors begin to align their investment portfolio now?
Okay, so two things for Nigerian investors, and one is to recession-proof their portfolio. We expect to go into a recession in Nigeria, so it's always good to have a recession-proof strategy. Also, we expect headline inflation to begin to tick up. Currently at 13.7, we expect to cross 14%. So whatever strategy you're going to have, you're going to have investment that can provide you capital appreciation, can provide you inflation edge. And at the moment, we saw yields on Eurobonds begin to spike up when we begin to see the second wave of the pandemic. So investors want to have some of their investment allocated in a stable currency. The US is a reserve currency. So we want to have some of your investments in stable currency that can give you that exchange rate buffer. You can consider maybe a mutual fund denominated in dollars. You can consider buying an Eurobond because even at the moment, Eurobonds at the moment offers you a premium to local FGM bonds. So at the moment, Eurobonds, for instance, Naira Eurobonds for a 5-year tenor is about 6%. 5-year local Eurobond is about 3%. So that's an aberration, for instance. So you need to recession-proof your portfolio. You need to look for investment that can give you capital appreciation. And equity might be somewhere to look at the moment. At the moment, most money market instruments are doing lower than 1%. That is real negative return. If you consider inflation at 10.7%, so you want to do equity market, there's some stocks that offer you attractive fundamentals. So two things: recession-proof your portfolio and have an inflation edge.
Now, if Joe Biden wins this election, is that likely to change the U.S. immigration decision for Nigeria?
I believe so. The Democrats are more liberal. I believe they want to change a lot of immigration policies, not just for Nigeria, for a lot of countries that have been affected. They are the more liberal party, so we expect that should change a bit.
Acting Managing Director at Quarters Capital, Gwelahun, thank you for sharing some of your time with us this morning.
Thank you very much.
When we return in just a moment, we'll be talking about health infrastructure and entrepreneurship. Just stay with us. Welcome back. Now, there's a broad understanding that an improved health sector can lead to sustainable economic growth in Nigeria, and this has made the calls for higher public revenue, which can translate to higher investment in health infrastructure, pertinent. Nigeria's health infrastructure, according to experts, has the potential to increase availability of food, increase earnings, which makes health spending more affordable and will aid in growing a healthy economy. Trained system engineer Oluwasoga Oni is one of the outstanding entrepreneurs that represented 8 African countries in 2020 Jack Ma Foundation's Africa Business Heroes competition and made the top 10 finalists. He joins us now on the program. Good morning and thank you for coming on the program. What stood you out in the Jack Ma Foundation's Africa Business Heroes competition?
Thank you so much for having me. I think one of the things that they saw in our application was the traction we had. We, just as a primer, we build and operate diagnostic facilities across the country, particularly in places that need it the most. And so I think that they saw like the work we're doing, how we've executed when we started. And we also told a really great story about what we are trying to do. So we painted a really great story about the vision we're trying to achieve. So for us, what we want to do is actually build a lot of these centers so that diagnostic is like more readily available across the country and across the continent. And I think that they saw that story and then they believed that since we've been doing it, that we can achieve it. So, and I think that that's why we are where we are today. Thank you.
Now, a healthy nation, we know, is a wealthy nation. As a participant in the Jack Ma Foundation's Africa Business Heroes competition, are there lessons you must have learned as to how Nigeria can get its health sector working?
Yeah, what I would say throughout the competition, one of the things that we had to do is we had to be very adaptable to different things that were required of us. And similarly, I think in the health sector, given the different challenges we have, we always have to be adaptable to what we are to the condition. And I think that with this application, one of the things that we had to show was that we can execute, and we can paint a really good picture of what we do. And I think that in the healthcare sector too, I think execution is key. It's not just enough to have these great ideas of what you want to do. You also have to implement those ideas and make sure that those ideas come into fruition. And I think that that's one key learnings that we've learned as part of this competition, and that we are also applying readily in our day-to-day job at MDAS.
So how, you are more of a tech person in the health sector. How do you think technology can support the growth of Nigeria's health sector?
Yeah, I think technology has a huge role to play. And we already saw that during the pandemic, when it was peak pandemic period, the rise of telemedicine app, where people can easily get access to a doctor just from the comfort of their own homes, where they don't need to really go to like a brick and mortar facility to get care. We see that accelerating over as time goes on. And I think that technology has a key role to play to make that happen more broadly. But then I also think that the technology piece is not just limited to telemedicine. We have great insurtech companies that are making health insurance more readily available to the public. I think that that's great. We have remote diagnosis where a radiologist can sit in Lagos and diagnose from multiple locations. That's something we currently do within our in our company. And so overall, what I would say is that technology is really key, but I don't think we're there yet. I think there's still some key foundational pieces that needs to be in place for that adoption curve to be a lot smoother.
And let's also talk about telemedicine now, which is fast becoming an in thing now, especially with the COVID-19 pandemic. But is there any future for this kind of technology here in Nigeria?
Yes, absolutely. I think from now going forward, I think telemedicine will always be a part of health provisioning in Nigeria. I think a part where we really need to figure out is how do we make it more readily affordable for people, and how do patients get really comfortable with the idea of being able to like access a doctor remotely. And I think because of the pandemic, that gap has been bridged a lot. And so we see so many telemedicine apps right now. Even insurance companies, HMOs are actually onboarding people on these types of apps. We see that more readily available right now. And so we think that COVID has been an accelerator for these types of platforms. And in the future, going forward, I think it will just become part and parcel of care. That we won't think about telemedicine as something different from care provisioning, to just be a part of providing care to people.
Now, I'd like to hear your thoughts about affordable healthcare system and how Nigeria can actually achieve that.
Yeah, I think that's one of the biggest problems we have. I think there's two key components of that. That is, of course, on the reimbursement side. That right now most of the care provision in Nigeria is out of pocket, and that hits people hard because we're really a low-income country, and so I think that going forward, what we need to do is, of course, work on the supply side. Make sure that a lot more people are enrolled with HMOs. We want more state insurance schemes to cover a lot of people, so that people can readily access care without having to pay at the point of care. And we think that if that happens, then there will be enough funding available to invest in the infrastructure piece, which is another big problem in healthcare, is that we have a huge deficit of infrastructure. That's something we're personally trying to solve for. But until you fix that supply side of care, it's very difficult to to fix the demand side. And we think that the key to providing this universal access to care is to government policy has to help roll up more and more people so that they're not paying out of pocket, because we are a really low income country. And so that's a critical piece of the equation.
Now, I'm glad you talked about funding on the part of governments now, and that brings me to my next question, which is the fact that the COVID-19 pandemic has further exposed the challenges in the nation's health sector. What is your assessment of the government's response so far, especially in terms of funding?
I think that the COVID story has actually, given what we hear from other parts of the world right now, we have done actually a great job with it. I think a lot of, we need to, when we do great job in our sector, healthcare sector, we have to be able to acknowledge that. And I think we've done a great job looking at how the positivity rate has dropped down. I think, of course, funding will always be a problem, but I think when we look at things overall, I think we have done a great job. And right now, it doesn't look like we see like a huge second wave as we're seeing in many parts of the globe. But even if that happens, we know that we have enough experience to know what to do, to know how to contact trace people, to know how to test people, and so on and so forth. And so even looking at how we've scaled up the number of molecular labs in the country, I think that that's actually one of the success stories of this year in the healthcare sector, is that we actually reacted, at least given our resources, given what we had. I think we had a great response to COVID-19.
CEO MDAS Global Oluwasegun Oni, thank you for joining us on the program, and here's wishing you all the best in the competition.
Thanks for having me.
Moving on now, the Nigerian Petroleum Development Company has reported an explosion at its production facility in oil mining lease 40 involving its partners and limited Elcrest Exploration and Production Nigeria Limited, while carrying out production evacuation in early production facility. According to a statement by the Nigerian National Petroleum Corporation, there were no fatalities or injuries from the explosion, but production will be cut by about 10,000 barrels per day. Now, that statement adds that the area recorded no significant spill in the community where it occurred. The OML 40 license lies onshore in the northwestern Niger Delta, approximately 65 kilometers northwest of Warri, and covers an area of 498 square kilometers. Elcrest E&P completed the acquisition of a 45% equity stake in OML 40 in September 2012 and has been producing oil from the Okwama field since 2014. Inland Oil and Gas Aberdeen reported in 2019 that the Gbetiokun oil field offshore Nigeria has come on stream through an early production facility, stating that initial production will rise to 12,000 barrels per day from the Gbetiokun 1 and Gbetiokun 3 wells in the southwestern area of OML 40. Now, that early production facility has a nominal capacity of 22,000 barrels per day. Now let's switch our conversation to the third edition of the FMDQ Gold Awards, which is scheduled to take place this week. And the awards were launched in 2018 as part of the commemoration of the FMDQ's first lustrum to recognize the stellar contributions of shareholders and contributors to the FMDQ's markets. The Group Chief Operating Officer at the FMDQ, Kodi Ugoji, joins us now to shed more light on the awards. Good morning, and thank you for coming on the program. Tell us more about the GOLD acronym, which is associated with the FMDQ, and what this means for the market.
Good morning, and thank you for having me. GOLD for FMDQ means it's an acronym for Global Competitiveness, Operational Excellence, and Diversity. And this is our measure for the Nigerian financial markets. All these, the four components within GOLD, actually speak to how we want the market to be developed to compare with its international counterparts. So GOLD pretty much for us is how are we developing the market? What are we doing to make it at par with international counterparts? How liquid is the market? How attractive is the market? You know, is it diverse? Diversity in terms of players, in terms of products. So pretty much just how we want the market participants to develop the Nigerian financial markets, to compare globally.
Now, judging from the highlights of the events held over the last 2 years, the FMDQ Gold Awards is fast becoming a signature beacon for celebrating the strength and success of the Nigerian financial market. So, with the evident disruptions that COVID-19 brought about and the recent unrest across parts of Nigeria, what should we expect from the FMDQ Gold Awards this year?
Yes, like you said, indeed, Gold Awards for the last 2 years was something that we all looked forward to, the market looked forward to, because apart from recognizing the participants in the market, it was a day of fun, just coming together as a market to relax after a hard year and just have fun. So we will miss that this year, unfortunately, but especially because of how tough the market was, we thought we would not do away with Gold Awards this year. Whilst we're not going to have a celebratory event, like we're not going to have the party, and we're not going to have a ceremony where we all dress up and come and let our hair down, we still thought it was important to recognize the participants. So this year, we're delivering Gold Awards by publication. So November 6th was supposed to be the Gold Awards ceremony. But on that day, we will be publishing the winners of 30 categories of the Gold Awards. So we're looking forward to Friday, where the winners will be unveiled this time. But we hope that by next year, we'll be able to go back to our Gold Awards as usual.
We all hope, don't we? Now, despite the challenges of recent times, I'm sure there are significant milestones that we have seen. So tell us the significant milestones that marked the period in review that's talking about October 2019 to September 2020 for the awards.
Okay, so firstly, I'll speak to the primary markets and the fixed income side. And we've seen quite a few issuers list and quote their securities on FMDQ. And it's been interesting for us because with the environment, we would have expected the opposite, but that wasn't the case. Issuers were able to tap the market and were able to see the largest commercial paper in history listed and quoted on FMDQ during the period. Were able to see the largest corporate bond issued on FMDQ, listed on FMDQ during the period. And from all of this, we were able to come up with a corporate securities benchmark. So the market has indeed lacked this very important benchmark, where we've seen federal government securities benchmarks. We have the bonds and the treasury bills, but we haven't had any credible corporate securities benchmark. So with these listings, we've been able to develop a benchmark of 4 companies within four sectors, actually. So we have a benchmark for natural gas now. We have a benchmark for infrastructure. We have a benchmark for the manufacturing side and also for telecoms. So that's a big deal for the market because indeed it gives corporate issuers something to compare when they want to come to the market. Other things within that period, we saw the CBN extend the monthly contract of OTCFX futures from 12 months, which was the longest contract, to 60 months, 5 years. So this has lengthened the curve in the market and gives the users the opportunity to hedge for 5 years, which is very good. So you can make long-term investments and hedge yourself, cover yourself completely. So that has been something else that has been very good for the market. During the period, we also received from the SEC the approval in principle for central counterparties, for FMDQ Clear, one of them. We also, just before that, received the rules for central counterparty from the SEC. We also got the SEC's rules on derivatives. And just to crown it, at the end of August, we got the presidential assent on the CAMA bill, signing it into law, CAMA 2020, which sets the legal framework, for derivatives in Nigeria. So everything that I've spoken to sort of points us to the fact that the market is fast moving to achieving its aim of creating and developing a thriving derivatives market, because now most of the building blocks are in place. So now it's time to come up with, products, market sensitization, working with the market to come up with products. So those are some of the key things that we've seen in the market. During the period as well, we saw the FC4SL, which is the Financial Center for Sustainability, Lagos. It joined its global counterparts and was a 33rd member of this great league, 33rd country in this great league, where Lagos State became, a sustainability center. And that is, again, key for us, because we know that the world is moving to sustainability, and Lagos and Nigeria is not left behind on that. During the period as well, as you know, FMDQ reorganized and became a capital market holding company, and moved from a securities exchange with a clearinghouse subsidiary to a capital market holding company group, and FMI, which is the Financial Market Infrastructure Group, with 5 subsidiaries, from the exchange to the clearinghouse, now a central counterparty, to depository, and to private markets. So again, that has shown the depth of the market across which FMDQ is growing, to provide a one-stop shop for all market participants and transactions. So those are some of the key things that have happened in the market that we're looking forward to celebrate the participants that make this happen.
Now, having reeled out the milestones, now looking forward, what are FMDQ's plans for the rest of 2020 as the year winds down?
I'm sure you can guess from what I said about derivatives that, developing that market and coming up with products in that market would be an immediate area for FMDQ to focus on, because everything is now in place. So we need to get that market moving. The SEC also last year approved FMDQ's equity trading rules. So equity listing rules. So again, that has set FMDQ preparing for its equity markets. So basically, we're putting in all the blocks that we need in terms of market readiness to launch our equities market. We also have, the value chain of FMDQ companies that I spoke about across, the financial market space. And we're doing everything, we're putting everything in place as well to ensure that the central counterparty, for which we just received the approval in principle for the SEC, is set to support the market. And some of what we've done in that area, one of what we've done in that area is to create a default resolution reserve, which provides financial resiliency for the central counterparty. We also have FMDQ Depository, which was introduced last year. Again, providing choice for investors and issuers in the market, because we only, giving empowering the market pretty much to choose where they want to have their funds. Developing FMDQ Depository is also a key focus area for us. And the private markets. We've seen a lot of focus on the public market, on the public companies tapping the market. We want to create a transparent avenue for the private companies to be able to tap the market as well, because we know that if we want to move forward in terms of infrastructure, in terms of development in the country, we need the private companies to rise up. And for them to do that, they need capital. And we're best to tap to raise capital and to tap the capital market. So those are some of the things that we're preparing for in the short to medium term, and working with the market to achieve all of these initiatives.
Group Chief Operating Officer at the FMDQ, Kodi Ugoje, thank you for speaking with us on the program.
Thank you very much.
We'll do an opening call to London and the Nigerian markets when we return in just a moment. Please stay with us. Time now for Juliana Olayinka to give us an analysis of major headlines driving the business world in the UK this morning. Good morning, Juliana. All eyes are on the outcome of the US presidential election, but what sound bites are you hearing regarding how the final result will affect the UK, especially as it concerns Brexit?
Oh gosh, it's been a long night, a very long night. Of course, like I said, I think I was talking to Chimize yesterday when I said most of the British journalists are all jam-packed across all of the decisive states and in Washington, awaiting this knife-edge result, which is obviously too close to call at the moment. Dominic Raab, the Foreign Secretary, he was speaking to British media this morning, and of course, he mentioned the obvious, which is that the British government are watching this race very closely with a lot of interest. We do know that if there is likely to be a Biden administration, the course of Brexit will take a different course because Joe Biden and his team have been very, very clear that a hard border between the north of Ireland and the south is just completely out of the question. He was also not happy that Boris Johnson, the British Prime Minister, decided to rip up parts of the withdrawal agreement. But I think it's important because the UK and the US are very, very strong allies. Just to quickly have a look at what we're seeing taking place stateside, we know that President Trump has declared victory. We also know that Joe Biden, former vice president, has declared victory. I had a look just before I came into the studio, and according to the Financial Times, so far Joe Biden has 238 electoral college votes. We know that it's a 270 for a win. Donald Trump has 213, but it's all to play for. There is no definitive result, and as we saw in 2016, the opinion polls clearly are wrong. They said it was going to be an undisputed Joe Biden victory, but we may not expect a result for days, even weeks. And Donald Trump did say in his speech in the White House that he will be taking it to the Supreme Court. So yes, it's all on a knife edge here, and worth mentioning that the FTSE opened lower in anticipation for a monumental battle for the White House.
Fingers crossed, Juliana. Now, analysts at the local data company are warning that up to 18,000 UK high street premises could be vacant amid the COVID crisis, and that's almost double the number in 2019. What does this mean?
Oh, what it means is that the high street, as we know it here in Britain, is disappearing. It's not the same, really, even where we are. We're very, very central. Oxford Street is just a stone's throw away from the studio here. It hasn't been the same. A lot of the big names that we're used to seeing are deciding to close their stores, and this is definitely the case outside of inner city London, where lots of shoe shops and fashion stores are being boarded up, and that's really one of the major fallouts from COVID. According to this local data report, the overall vacancy rate rose to 13.2% in the third quarter of 2020. That's up from 12.4% in Q2. Shopping centres appear to be taking the worst of the brunt, and that's because their stores are mainly fashion stores, and people are just not going into stores anymore. The restrictions have made people stay away. Of course, we've seen a surge in e-commerce and online shopping. For some people, it's just a lot more convenient, and we are seeing a trajectory towards that. It is particularly worrying, of course, because we know come tomorrow or midnight tonight, Britain is going into another lockdown, which means the retail sector that was already struggling is literally going to struggle to survive once they emerge in December. That's if we emerge, because we're not sure whether or not the lockdown will be extended. It was worth mentioning as well, just last week, John Lewis, which is a major high street brand here in the UK, their flagship store on Oxford Circus got the green light from Westminster Council to transform parts of their third and fourth floor into office space. So even the big giants like John Lewis are realising that they don't need that much retail space. And I think it really just reflects the sign of the times here in Britain.
And talking about the impact of the pandemic now, a new data from the Office for National Statistics showing the number of people paid below minimum wage have surged to about 2 million since the COVID pandemic began. Can you shed more light on this report?
Well, really, it's just, again, it's another fallout from COVID-19, isn't it? And the fact that, unfortunately, what we're seeing in most societies is that it affects the people who are in lower paid jobs or the less privileged. This time last year, there are about 400,000 people on or under the minimum wage. I believe the minimum wage for over 25s in Britain at the moment is about £8.25. But since the pandemic, it's now increased to about over 2 million people. And that's because of the furlough scheme, the wage subsidy scheme, which was a scheme for employers to keep people in their jobs. Now, the government were paying 80%, allowing a company or your boss to top up your wages by 20%. But what this report has realised, or what Office for National Statistics has revealed, is that most individuals in the lowest paying jobs were not getting their wages topped up. So if you were on £8.25, but you were only receiving 80% of that, then of course you fall under the low minimum wage scheme. Francis O'Grady, he is the General Secretary of the TUC, a union that looks after workers. He said the government must fix the furlough scheme to ensure that no one is paid less than the minimum wage. Low paid and younger workers have been hit hardest during this pandemic. Many on furlough have not had their incomes topped up by their employers. It is likely to get worse. We know the furlough scheme has been extended into this month, but that tsunami of job losses, which we've been speaking about on this programme over the past couple of months, is still very much a reality. And job insecurity, as highlighted by this data from the Office for National Statistics, is a reality for millions of people living in Britain.
These are certainly not the best of times, Juliana. Thank you, and we'll see you again much later. Eddie Young Iwang joins us now to run through activities. Over to you, Eddie.
Thank you, BC. Well, there was a tussle between the Bulls and the Bears yesterday, and just like you can see, the Bulls stole the show at the end of trading as the market rose 0.83% to 30,733.47 points. Now look at that. We've gotten to the 16 trillion naira mark as the market gained about 133 billion naira yesterday. But just before we go on with that, let's talk to Phil Anigbe, a research analyst at Cardinal Stone Securities. Good morning, Mr. Anigbe. Thank you for joining us on the program.
Yeah, good morning, Eddie Young.
Dangote Cement was one of the major drivers in the market yesterday, as that stock gained by over 5%. Do you have any idea what drove interest for the stock?
Well, you see tactical positioning in Dangote Cement ahead of expected result release on Friday. So the company will be having a meeting on Thursday, and by Friday there should be the release of their 9-month numbers. So people are taking position in anticipation of that 9-month numbers, and I was expecting that because of the relatively stable or near normal rainfall across most states of the federation or of the country, that the performance will be at least better than what we saw last year. And of course, recently they've reported significant traction in their operations in key countries outside of Nigeria. So all of that, more or less, people taking position ahead of the release of results, and expectations are that the results will be at least pretty decent.
All right, Mr. Anigbe, thank you for your input on the program. Phil Anigbe is a research analyst at Cardinal Stone Securities. Well, just because we're short of time, we won't be able to go on with a market review, but we'll hope for a positive trading day, BC.
Thank you, Eddie. We'll see where the markets head to at the end of the day. And that's our program today. Thank you for watching. I am BC Adebayo.